Now let's talk a global perspective of the markets. I had mentioned earlier that the Nikkei had a record close. The yen made big moves. Jeffrey Kleintop is with us, Chief Global Investment Strategist at Charles Schwab. Let's start with Japan. Tell us a little bit about what you're watching
big.
And why we're seeing. Yeah. Tell us why you're seeing
It's
these
done
moves.
so
What are
well.
the moves that we're seeing and why?
Yeah, Nicole, Japan's been one of my favorite stock markets for a couple of years now. As you mentioned, the Nikkei hit a new record. The yen is almost up 2% today versus the dollar. So I know some investors are seeing some losses in their portfolio today, but man, internationally, Japan's doing well. In fact, Japan's stock market is up 8.2% so far here in the third quarter, but we're only like a week and a half in, and that's measured in US dollars for once. Japan is the largest weighting in the international indexes like the EFI index, so it matters a lot, and it's killing it this year. It's up 26% this year, but unfortunately, because of the weak yen in the first half of the year, in dollars, 12%. That's not bad, but it's lagging the S&P 500. So what happens with the yen in the second year matters a lot, and I'm bullish on the yen in the second half of the year. Both the Fed and the Bank of Japan have meetings at the end of this month, July 31st, same day. The market-based odds of a Fed rate cut by the September meeting are now at about 99% with the CPI data today. September are nearly showing short-term rate differential continually seen since 1986, and more of those stocks passing through to U.S. investors.
Why does it matter? I mean, I know Japan has been a great stock market. We talked about the growth that we've been seeing in Japan and India. Remember, China used to be our China growth, and then that slowed and it became Japan and India. Why does it matter to investors here at home to see the moves we're seeing there?
Well, again, I mean, Japan is the biggest weight fee index. So if you have any international exposure, even through a broad ETF that covers the whole world, you're getting a big amount of exposure there. Japan is important to the world because it's a maker of a lot of important industrial products and consumer products, right? From the big car brands we all know to the big TV and computer brands. Also make a lot of earth-moving equipment, which is being used in China right now. On a number of projects. They make a lot of capital equipment that's used around the world. So they're a real buyer to the rest of the world. In fact, for many of Japan's companies, only about 10 or 20% of their sales are in Japan. They're truly global in their operations and their sales. So really, it does give us kind of a barometer on manufacturing and demand around the world. So it's encouraging. And one of the things that we saw in Japan here in the second quarter was that GDP in Q2 is probably about 2.2% for Japan. Now, that's better than the forecast for U.S. GDP in Q2 at 1.5%. So we've got faster inflation maybe in Japan in the second half of this year than what we're seeing in the U.S. and better growth. And all that points to more rate hikes by the Bank of Japan. You can see in this chart here, this is one of my favorite leading indicators of inflation in Japan. It's the PMI survey on input prices. That continues to rise, suggesting inflation in Japan might remain above 2%, keeping rate hikes on tap, supporting the yen, supporting a pass-through of those gains to U.S. investors.
Right, understood. Great to see you. Jeffrey Kleintop, thank you so much for that global perspective. Jeffrey Kleintop, Charles Schwab, thank you.